Yes, Assalamu alaikum students. Welcome back to our second lecture for chapter number 3. Actually, this is where we stopped in the last class. For chapter 3, 3.14 is the question which we solved it. This was the question number 14, which tell us, right, that I'll just show you the question which we yes, this was question number 14. We already solved it, question number 14 in the last time. So now we'll continue from next slide, which is question number 19. So I'll go back to a book just to show you what is question number 19. Yes, now in question number 19, this is the given. If you desire to withdraw the amount given in table 3.19 here over the next 5 years from a saving account that earns 8% interest compounded annually, how much do you need to deposit now? So it means that if we need this amount, remember this is example is just like you need some money in year 2, like this one, year 3 this is the amount you need, year 4, year 5. So how much you must deposit now so that this amount of money is available in different period of time here. So it means we need to calculate a P for each one separately. So how to calculate a P? Using our basic formula, right? We take it separately for each one, for year 2, year 3, year 4 and year 5. This is what we need to calculate. And how do we calculate it? Same formula, F equal to P or P equal to, because we have to calculate F over 1 plus I to the power n. So 13,000 is F over 1 plus I to the power n, 1 plus I 8% after 2 years, right? So this is what we need to calculate. N is 2, here n will be 3, 4 or 5. So this is what we need to calculate. And what it means here, that we need to have 90,000 now, so that after year 1 you can withdraw this amount, after year 3 you can withdraw this amount, year 4 and in last year 5 you can withdraw this one if you invest this one today. This was the question. Now next is question number 20. Yes, if 2,200 is invested now, right? So it means year 0 is given the cash flow, 2,200 3 years from now and 3,500 5 years from now at an interest rate of 6% compounded annually. What will be the total amount in 8 years? So total amount in 8 years. What will be the total amount in 8 years? So it means we have to find the value at the end of 8 years, which is F. So going back to same formula, we can find for 20 F equal to feature using this formula you can calculate 2,200 where n will be 8, 2,800 where n will be because we are calculating for after 8 years, right? So for this cash flow, year 0, year 8, right? And this one 3 years, this one will be deposited. So 8 years means n will be 5, and for this one n will be 3. So using this equation, F equal to P, and you solve it, you get 11,705. So you need to just practice. It's easy. Question number 21. sorry, we are not going 21. Next is 22. So only focus on the question which we solve here. How much invested now at 7% would be just sufficient to provide 3 payments? How much invested now? If you read a question and focus here, it means we need to find P, right? How much invested now? It means we have to find a P. What is the value of P, right? Which we need to find. At 7% would be just sufficient to provide 3 payments. This is similar to a previous question. You have to find P with first payment this much occurring 2 years hence, and 7,500 4 years, and finally 4,000 8 years. So how much you must invest now in order to get these payments at different time periods? So using the same formula or basic, we can calculate present value P equal to f over 1 plus I to the power n. 10,000 with n is 2, 10,000 n is 4, and 10,000 when n is 8, and then this will be our final answer for 22. Yes, coming back to next question, which is question number 23. We need to look at a question. This is for future payment series. What is the future worth? So this question we need to calculate f of a series of equal. Now this is the difference between previous question. If you look at a question here, it says what is the f for series of equal year-end deposit. Means that end of each year we deposit 5,000 for 12 years in a saving account that earns 8% annual interest, right? And what will be f with certain conditions? Part A, all deposits are made at the end of year. As I said before, mostly these transactions are for end of a year, right? Means that you pay at the end of a year. Like in previous question, here we assume that these payments, this amount was for end of year, right? By default, all payments are mentioned as end of year, or the interest rate always mentioned as compound interest. Even if it is nothing mentioned here, we assume that all interest is 8%, unless it is mentioned that it is simple interest. So just for your info, if you go back to question number 2 or 3 here, you can see here the interest is 8% compounded annually, compounded, and 8% simple interest. 8% annually, right, and simple interest, like mentioned here. Only in these questions, only these 2 questions it is mentioned, but rest of the questions, see here, 8 compounded annually, so it is compounded, right? If you look at question number 5, interest, it says here 4% interest. So 4% is by default is compound interest, whether it is mentioned or not mentioned, directly it is compound interest always for any question. Like for example, if you look at question number 6 here, it says the same thing, 8% interest, right? So it is compounded. 3.7, if you look at here, 10% annual interest, so it is compound interest. Similarly, if you look at other questions, it is same thing. If we look at question number 3.9, interest rate is 10%, or here it is, okay, it's mentioned compounded annually, here it is 10% in question number 11, so it's all compound interest. So coming back to, this is what we have started, question number 23, right? So by default all interest are compounded, and same thing for payments or at the end of each year. There is a slight change in the formula when it is beginning of each year, like we give an advance payment, right? Just like our installments we pay in a real life is in the beginning, or sometimes we pay it at the end of a month, but here we assume that all payments are at the end of a year. All, this is whole chapter 3, chapter 4, chapter 5, all payments are at the end of a year, unless there is mention like in this question. We'll see what is the difference between part A and part B when we solve it. So part A, with this condition, what is the F? This is what we need to calculate. Part A, with deposit at the end of a year, and this is the formula to calculate an F, right, which is A equal to 1 plus I to the power n minus 1 over I, and we have all info given. A is given. A is the equal payment, or payment series, right? End of year deposit 5,000. End of year equal, so you can see here series, so you have to read the series of equal year and deposit 5,000. This is our A. So A is given 5,000, I is given, which is 8%, N is 12. After 12 years, what will be the value of this amount? Okay, so this is the question which we just solved it. Then you can calculate F equal to this one using this formula. We can do the same thing, let's say, just to explain the same question, right here. What is the future? Basically, what was the question? This one, 0 to 12 years, right? We have 0, 1, 2, 3, so on, and just go until 12 years. What we are going to do, every year we are going to, every year means end of a year, we are going to deposit 5,000, 5,000, 5,000, and we keep on. This is what we are depositing every year. So how much we will have the F at the end of right? Sorry, just right. So how much we are going to have if this was the question at an interest rate of, what was the interest rate? 8%. 8% is the interest. So what will be the value of, means value of this 5,000, this 5,000, this, and we keep on until we reach 12. Either you can calculate one by one, which takes time, or we can use this formula to calculate our F. This was what we are going to. F equal to A, and we find out. Now this one, we assume that all payments are made at end of each year, which is a normal situation. Sometimes we pay if the payments are made or deposit at the beginning of each year. In this case, what we need to do is always we complete our question just like this one, and at the end we add it one more year, means whatever your answer, 94,886 times 1 plus I. Okay, you can see here it's the same thing. You need to add one more year because of the beginning of year, right? You need to add one more year times 1.08. This is what you need to do only for this one. 1 plus R, basically 1 plus I or 1 plus R, you have to multiply with your answer. This is how you solve it if payments are made at the beginning of year. This is the only difference. You continue until part A and then multiply. If it is 1.0 beginning of year, you need to add with 1 plus I, multiply your answer, whatever your F, with 1 plus I. Okay, hope it's clear. If it's not clear, just send me a WhatsApp message as well. Now next question, 3.24. You are paying into a mutual fund that earns 7% compound interest. If you are making an annual contribution of 14,000, how much will be in the fund in 25 years? See, first of all, we need to see what we need to calculate. Understand the question carefully. How much will be in the fund in 25 years? How much will be in 25 years? So it means you have to find P or F. Think about it. How much will be in the fund in 25 years? Means you have to find out F. Yes, you're right. How much will be in the fund in 25 years? So you have to find F. Let's see what is given. You are paying into a mutual fund. Mutual fund is normally a fund established by banks where you deposit some money. It's a investment scheme from the bank. You make an annual contribution, means every year annual contribution 14,000, means A is 14,000 annual sanavi. From your side you deposit every year 14,000. How much you will have after 25 years? So A is given and you have to find F. So we have the formula F equal to A. Using the same formula you can calculate the question. A is 14,000, interest rate is 7%, N is 25. Using this formula you can easily solve this question. Now moving to next question, which is 25, which is a straightforward. What is the future worth of the following series of payments? So means that what you have in the below series of payments, it means A is given and F you need to find out. Now part A, 9,000 at the end of each year. So what is your A? 9,000. 6 years is this one, and it will be compounded at this rate annually. So it's easy, you're done, right? If you go back, using the same formula, F equal to A, right? This is the formula we used it, right, to find out the F for 25. A is given, I is given for each part, and you can solve it. Question number 26 is also similar, but what you need to find out, what equal annual series of payments, means A, you need to find out what equal annual series of payments. In this question, A is unknown, must be paid into a sinking fund to accumulate the following amounts. What is a sinking fund? Again, it's a fund which you need some amount. As an example, I'll show you later as well. For example, after 8 years you want to purchase a car, as an example, right? So how much you must save every year or every month, right, so that by that time you have that amount and you can get whatever. Sinking fund, this is what we call it, right? Or you have to return a loan after 10 years, so how much you must deposit now, so that at the end your money will be same as what you needed, so that by the end of that year you can pay off your loan. This is what we call it, a sinking fund, because you need some amount of money total in the future, so you want to know how much you must deposit now, every year or every month, whatever time period is, so that in the end you have that amount. This is what we call it, sinking fund. Formula basically is same, no difference. I'll show you for 3 point this one, right? For this question we have A, B, C and D. Question 26, if you need 54,000, see, I'll go back to the question again. what equal annual series of payments must be paid to accumulate the following amounts? Means if you need to get this accumulation, means this is the total amount after certain periods. Means if you want to have an F of whatever is given, what should be A? So looking at this question, if you want to have 54,000 in 12 years, means at the end of 12 years, if you want F to be 54,000, how much you must deposit every year, right? And if you invest that money for 7% every year, right, this is your profit, whatever you get, right? So using this equation we can find out what will be our A, right? So we have to find out an A. How to find an A? From the same formula here, you can find F equal to A. This formula you can use it to find out what is A. This is the formula we are using in 26. Okay. So A equal to F is 54, I is 7%, N is 12 in part A, and you can find out A. So if you deposit 3019 every year and you invest this money at 7% interest or 7% profit rate, at the end of 12 years you will have 54,000. This is the purpose. Now similarly we'll go to the next question, 27. Now you want to save money, 27, from your business operation to replace a truck or machine, whatever. Now it's a business scenario, a situation in your daily life. As an engineer you have to make a decision, right? What is the situation here? That you want to save some money now from your business so that you can replace a truck when it is due. Now the truck will be replaced after 12 years. You don't need it now. That truck is okay now until 12 years. So the so truck will be replaced after 12 years from now, and replacement cost would be about 60,000. When we are going to replace the truck, after 12 years, and we need 60,000. Is it a P or F? This is what you need to find out in these questions. We are going to imagine your situation. You need to buy a car after 12 years. So this 60,000 is basically our F. In future you need this 60,000 after 12 years. So this is F. If you can figure out this one, solving is very easy. If you earn 5% interest on your savings, how much must you deposit at the end of each year? How much you deposit at the end of each year so that you have this F. So it means you need to use a formula which is A and F, right? So using this formula, right, you can find out your A, right? We need to find out the A, right? And this is the answer. Using this formula you can solve and practice yourself. Question number 28. Similar. Part of the income that machine generate is put into a sinking fund to replace some machine when it wears out. So when your machine wears out, you will replace it. But right now you are saving some amount into a sinking fund so that in the future you have some money. If 2,400 is deposited annually at 5% interest rate, how many years must the machine be kept before a new machine costing 45,000 can be purchased? I'll explain this question here. Part of our income that machine is put into a sinking fund. What is that part of our income? 2,400 is deposited annually at 5% interest. How much is deposited? 2,400 is deposited annually. Yes. But for how long, this is we don't know. Right. So if 2400 is deposited, how many years must be kept before a new machine costing 45,000? So there will be a new machine in future which will cost you 45,000, right? This is what you need to do. This is what how the question is framed to you. Now F is given, A is given, this is A, right? It is equal every year, equal. Now this was the question, right? Now I'll repeat the question. Part of the income that a machine generates is put into a sinking fund so that the machine can be replaced when it wears out. So you save this money every year, right, for n years, so that by the end you are going to purchase a machine which costs this one, right? Now if this is the cost, this is your saving. They say, okay, let's say you have an old machine, right? Your old machine, understand this one. How many years that must be kept before a new machine costing can be purchased? So you have to make sure, let's say you want to know, okay, how long I can run with this machine, the old machine which gives you me this profit, right? What should be the life of this machine? You want to know how long I can extend if this is the cost of the new machine, right? You have to make a decision. Remember how long to continue with this machine, okay, so that you make a proper maintenance of that machine or whatever it is required to make sure that we can carry the machine up to that point. So this was the question, right? How many years? So it means you have to find an n from our formula. So what is given is F and A, so it means you have to use this formula, right? And yes, and find out the n, right? Now you have an equation where n is unknown, F is 45,000, A is 2,400, I is 5%, n is unknown. So you put these numbers into this equation and then you can solve this question number. This one 28, right? So if you solve it approximately, n will be 13.56, or approximately it will be, if you round it to the years, because the question asks for the years, number of years, right? So approximately it is 14 years of operation. So you need to use an old machine for 14 years, then you can have this amount, right? Okay, so 28 is done. Now we will move to the next question, which is 31, which is simple. What equal annual payment series is required? What equal annual payment, what A is required to repay the following present amount? That this is what you need to repay, the following present amount. Today is 14,000 in 5 year at 7.5% interest compounded annually. So you took a loan, let's say, of 14,000 today, because it says here present amount, following present amount. So P is given, right? Now the question will become like this one. You have 14,000, right? This is not given, right? What equal payment is required means A is unknown. Let's say it's like kind of taking a loan of 14,000 in 5 years. So N is 5 years, right? At 7.5% interest. So it is 7.5% interest. So this is our interest rate. We have nothing here. nothing here. So what we have is so P is given. It means we don't have to use this formula, we have to use another formula for now. This is the situation in this question. Understand how to make a difference with this question. What equal annual payment series is required? So you have to find A to repay the following present amount. Present amount is given very clear in the question, 14,000 in 5 years, part A, right? So if you have to return this 14,000, imagine today you took a loan of 14,000, so how much must be your equal annual installment? You purchase a car for 14,000, what must be? This is how the installments are calculated basically. When you go and purchase a car, they know what is the cost, they know what is a time, what should be their profit rate. They only enter this information using this formula and they can calculate the amount of installments, right? So using this formula you can find out the A, which is the missing amount. Okay, so 31 you can find A for each part using this formula, easy. Now moving to next question, which is question number 33. Now in question 33, okay, question 33, yes. You borrowed 60,000 at an interest rate of 10.5%. Equal payments will be made over a 5-year period. First payment will be made at the end of the first year. What will be the annual payment and what will be the interest payment for the 4th year? Now this question is similar to question 3.4 which we solved last time. I'll go back to that question as well just to show you. See, what was 3.4? You took a loan of 25,000 and you have to return that loan with 10% and you have to pay this as an equal payments, right? Equal annual payments, right? This was given in 3.4. If you don't know, first go back, stop the video here, right? Go back to this question and try to look at it and understand it clearly, right? Okay, now if you already looked at it again, okay, you must have understood that in this question this amount was given, but when we go to this question 33, only the amount of loan is given, but we don't know what was the equal payment, right? So in this question, first of all we need to find out what is the payment we have to made for this loan, and then you have to find out in every payment how much is the principal, how much is the interest, right? Then we can solve this equation, right? What will be the interest period for the 4th year? That the question says in 4 year, not in 4 year, in 4th year, how much was the interest payment? How we can find out? If we know what was our installment for a year, and out of that how much is the principal, how much is the interest. If you don't understand what I am talking about, again you can go back to 3.4 and look at that question again. Okay, now 3.33. equal annual payments, which we need to find out using this formula, because our loan P 60,000 is given, right? And with this formula we can find out A, P is given, I is given, N is 5, right? I is 10.5%, so A is 16,030. So this is our annual installment. What is our annual installment? Is 16,000. Now using this equation, right, we first find out what is A, right? So basically it is 16,000 if I look at my question here, this is what we already had. So our P every year is this one. Right. Okay. So the loan is for 5 years. So for 5 years, see, this is what we have every year. This is the installment. And what is our present amount? 60,000. We took a loan of 60,000, and this is how we are going to return, right? So using this equation we find out A, which was not given, so now we know A. Okay, now the question here in this one, let's say this is year 4. I'll just put here, okay, we don't have anything. So basically this is the scenario. Now they are saying what is the requirement in this question. Now we know the A is here is A, we already find out, right? This is A, all are A, right? Now in this installment, if you go back to the question, and if you remember that whenever we take a loan, we are returning this loan 60,000 by these 5 installments. So every installment there is a part of principal and there is a part of interest, right? Principal and interest. If still you don't know, again stop it, go back to previous video and looked at question 3.4. So basically the question says in year 4 here, in 4th year, out of this 16,000, out of this how much is the principal we are returning, plus how much is the interest, right? This is what we, every installment there is a principal. Out of principal means out of the original amount plus the profit which we are paying to them. In every installment you have that amount, right? All the installment amount can be broken down into these two things, right? For every installment there is P and there is interest. But the question which is asked to us is what is the interest in 4th year, in this year? What is the interest amount? That was the question. See what it says here, what will be the annual payment, which we already calculated, part A. This is the answer. What will the annual payment? A is this one, 16,030. This one is our right. So A is already found out. We done with part A of this question. And what will be the interest payment for 4th year? That in this year how much is the interest? So how do we solve it? Remember, like what we did for 3.4, we have to make a loan repayment schedule, and that schedule will explain everything. So this is the loan repayment schedule. You put the first column as, right, first is a principal repayment, how we calculate, which is right now for year 0 is 0, interest payment is 0. Slide is available, you can just run a slideshow. You will see this is principal repayment, this is interest repayment, this is our balance, which is 60,000, the amount of loan in first installment, which is this one, right, 16,030.53. How much is the interest payment? Is basically 5% at 60,000. Whatever the interest amount is, it 10.5%, sorry, the amount of interest. So 60,000 times 10.5%, this is the amount of interest. You get it. This is how first you solve this column, which is 60,000 times 10.5%, you get this number. Now out of your installment, this is the interest. What was the principal repayment? Is 16,030.53 minus 6,300, means this amount here, you get this one. Okay, now this one, now your installment, if you add this one and this one, it becomes same as your installment. So your installment is broken down into this one. If I look at it for first one, means how much is the principal? This is how it is, right? From this one, sorry, I'll go back and yes. Now principal repayment is 9,730.53 plus the interest. What was the interest in first installment? 6,300. See, 6,300. See, if I'm going to add both of them, if I'm going to add it, it is same like our installment. So what it shows here, in first installment, out of 60,000 we return this amount, but we paid this as an installment. So basically the other amount here is our interest. Similarly, we go to second year and find out what is the principal, what is the interest. We go to year 3, what is the principal, what is the interest. We go to year 4, and what is the interest. So in this question they say what is this interest in year 4. So you continue like this one until you go to year 4, which is 13,128.749 plus 2,901.781. So it is 14,507. Is this is how you get it. Okay, I'll repeat again. First you need to calculate this amount, which is 10.5% of your balance. Okay, once you know this one, minus it from our installment amount, which is 16,030 minus this one. So now you clear these two columns. In last column, which is our balance, how much we have paid? We paid 60,000, right, minus 9,730. So out of 60,000 we already paid 9,730. so this is what we are left. Anyhow, for example, you don't want to continue with the payment. After 1 year you say no, I want to pay full. They'll say okay, if you want to pay full, you need to pay 50,269.470 if you want to close your account, right? Imagine this is your car payment, and sometimes you want to say no, I want to pay it full now, right? So this is how it should be calculated, right? Or after 2 years you just want to say no, I want to stop my payment, I will pay the full amount. So by end of year 2 you should pay 39,517.234. This is how our loan repayment schedule is calculated, right? So in this question it was for year 4, interest is 2,901.781. This is the answer for second part, right? 2,901.781. right here, this one, 2,901.781. is it like this one? How much is principal? Right, so this is what we have paid, right? What the question was for the interest amount only, depends on the question. So what is the answer for second part? One is the installment which we calculated, and one is the interest. Now I'll go back, see what it says here. What will be the interest for fourth year? So we solved it. Next one, question 34. You borrowed 18,000 from a bank. Okay, you borrowed, so it means this is when we borrowed. Now, so this is our P, right? We borrowed, we take a loan, so this is P from a bank with the agreement that you repay the balance in 12 equal installments. So you will return the loan in 12 equal installments at an interest of 9.5%. What should be the required annual payment size? So P is given, so you have to find A, right? I'll show you here. Next question, 3.34, right? So with this one you can find out what is an A, right, using this formula. So 2,577.38 is the amount you must pay to return your loan at interest rate of 9.5% for 12 installments. Now next one is, I'll go back, 3.35, which is easy. What is the present worth of the following series of payment? What is the present? Means you have to find P for the following series of payment. What is the P for the following series of the payments? I'll just want to show you something for previous question just to see what is the difference. If I go back, see here, what will be the amount accumulated by the following present investment? So P is given, what will be the F? But this one here is a single amount. Remember, this is this difference. Understand the question. This one and the one you just looked at it, for a series of payment you need 4,000 in 6 years, and what will be the amount accumulated? What will be the F? So F equal to P times 1 plus I to the power n. But if you look at this question which we are solving now, what is the present worth for the following series of payment? Means this one is A at the end of each year, so it means end of each year. So A is 1,500, and what is the P? A is given for 10 years, so rest is easy, you need to understand. So 35, P equal to part A, B, C, D, or all same. 3.36, you are considering buying a piece of industrial equipment to automate part of your production process. Now see, you just want to purchase, you have to make a decision as an engineer, right? It's part of your job is to make decisions, right? Engineering decisions and economic decisions, right? Now we have learned some techniques. Now we are going to see how we are going to apply those techniques. Now you made a decision on the engineering side, it's done. You made a decision about whatever the technical details, right? So now that technical detail, that automation will save a labor cost. Saving a labor cost is a benefit as well, right? 42,000 per year. So the benefit which you get from this project or from this idea is that you are going to save a labor cost. If you save a labor cost, means there will be increase in your profit, right? Which is a benefit. So the benefit is 42,000 per year. Every year this will be your benefit. So this is your E, F or A. What it will be? Can you think on it? it is A, yes. So 42,000 per year is our annual benefit. Equipment cost is 270,000. Should you purchase the equipment or not? Understand? See, I'll use the same one. See, what is the cost? 270,000. Okay, this is the one scenario. As a result of, if you purchase this automation, this is the cost, right? And what is the benefit? If you purchase this automation system, you will save 42,000 per year. Okay, you'll say, and interest rate is 10%. Okay, so this is the interest rate, and the automation system will save us for 12 years. So whatever the system you provide, it will save us for, let's say we continue. I'm just putting dot, right? Let's delete it. Okay, now this is the scenario for 12 years. For 12 years we are going to get this benefit at this cost. Should we purchase this system or not? Imagine now this is a practical situation, a real life scenario where you have to choose, right? Now this is a system. So what should we do? 42,000 is the benefit and this is the cost. So what we need to do is we compare benefit with the cost, right? If our benefits are more than the cost, we should go ahead. If our benefits are less than the cost, we should not purchase, right? Maybe how to calculate a value of benefits, we may say, okay, 42 up to 12 years, what is the total benefits, right? If you add them, if you add all these 42, right, you can simply say it will become, let's say for 12 years is 504,000 if you add all of them, right? This is the amount, and you say okay, benefit is 504 and cost is this one. Yes, it's a good decision. I'm going to stop. Is it okay what I done? As per the principle of engineering economics, is it okay that I added all these amounts and compared it with this one? No, it's not correct, right? Why it's not correct? Because here when I add all these amounts, I consider them the same amount, right? But the first principle says this amount and this amount are not equal because they occur at a different period of time. Time value of money, they are not same. You cannot simply add them because their value, the equivalent value is different. So what now you need to do is, you cannot do it, you cannot just add it, so it's a wrong way. What is the best way is to calculate a present value of all these cash flows as of today and then compare with this cost. This is our cost. Imagine this is the cost of a new machine, right? And now you can see what is the present value of all the benefits. These are your benefits. What is the present value means here. So what is the P for these benefits, right? What is the P for these benefits? Present value of this money, because you bring them in year 0 to compare them, right? They will be at the same time period. Now I can compare. Once I calculate P of this, right, in the same time period, you bring them in present and see if this is your benefits, right? If their P is more than this, you should say it's a good investment. If you don't, then if it is this amount, whatever we calculate is less than this, then it's not a good investment, right? This is how you should make a decision. Very important. This is the purpose of all this chapter 3 or whatever the course you are taking, right? This is a practical application of the concepts you learned, right? This amount and this is not same. You cannot simply add them and bring it here, right? It's totally wrong, because they occur in different point of time in a future. So what is their value as of today? How we calculate? We know the formula, right? P equal to A times this amount. So we calculate it and we find out it is 286.175. so basically what it is 286,000, right? 86175. Let's just make it round, right? Okay, now you can see here, if you add all of them, it is not correct, right? It's not what we thought before, that it is simply if you multiply by add all of them, it becomes 504, right? If you add all of these amount, it is 504, but which is wrong. You cannot add it, right? So you can see the difference in making decisions. Before you thought, oh, my profit is this one 504, so I can calculate 504 minus this, so I'm making a profit on this project 234,000 if you added all these things, but which is wrong. So this is not a right way to make your analysis. Now if you want to calculate your profit, you should not use this amount, right? What you should use is present value of these, right? This one here, which is, let's say this amount minus 270. This is what should be the correct profit on this project. So it is 16,100. This is the profit you are making on this project. Now it's up to you, whatever decision, is it good or not, right? As is this profit acceptable to management, right? But if you use before and you are saying no, this 234,000 is the profit on this project, it is wrong. You are making a totally wrong decision based on wrong foundation. This is not the correct way. What should be the correct way is, this is the profit from this project. This is very important, so that's why I spent some time explaining you the concept. So this is the summary of the concepts you have learned in this chapter. In order to make decisions, this is the reason that we need to have an understanding of time value of money. So I'm going to finish my lecture now. So the time is up. This is our last slide as well. As I said before, this is in compensation to our missed classes in week 1. So look at it, look this one, and if you have any question, anything not clear, please come back and ask me questions in a class, or you can send me a message through WhatsApp. But this concept very important, so pay your attention, learn, practice. Very important to have a good practice. And these concepts you will see it again in chapter 4 as well as in chapter 5. Very important. So try to review. Okay, thank you very much and best of luck.